Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts to set you straight for the week. In reality, setting myself straight for the week, trying to figure out what the heck's going on here. Put together a list of things that are mainly headwinds here. Our tailwinds are pretty weak overall. Most of our headwinds are related to risk-off strength. Specifically, what this mostly boils down to is uncertainty ticking up significantly thanks to geopolitical events. How high are interest rates going to go? When is a cut coming, if ever, at this point? How low will the legacy indices go? What does the gold price really mean here? Does it mean the world has given up on US Treasuries, for example, or does this represent Asia? Does this represent central banks? Certainly doesn't represent US buyers based on the ETF numbers I've seen. I would argue from a technical angle that it makes sense that gold broke out the way it did, but the fundamental folks point to Asia, point to central banks. Liquidity, of course, has continued to pull back. We are kind of in this lull of liquidity over the next couple of weeks here, just as the US Congress votes to spend billions more dollars. So eventually the long game here boils down to Bitcoin wins because everything else is getting worse. That isn't like, doomer viewpoint. It's just insurance at this point. The fiat system continues to do what it does best and spend until the wheels fall off the wagon. On the crypto side, we of course had halving last week. That's never bullish immediately. It would be unusual if it were to be bullish immediately. Almost always that's going to be bullish. 60, 90, 120 days after halving. We'll take a look at that. ETF flows have been fairly negative, kind of weak. So I put that in the headwind category. None of this stuff is making it impossible for price to go up. It's just a matter of probabilities. It's just a matter of what would you rather see? What is the Goldilocks level of perfection for a risk-on rally? We kind of have the opposite. We're ticking all of the wrong boxes in each of these categories. We don't have ETF options yet. That's coming later. We don't really know about Wirehouse ETF access yet. That's most certainly coming later. And then I threw the Gensler resigning portion on there just for S's and G's. He's probably not resigning, but hey, if Trump wins, maybe he gets booted. But I suspect that would be more of a tailwind for crypto than Bitcoin, but still in the realm of possibilities here. So as bearish as this list looks, technicals, which I'll get to in a second, certainly don't look that bearish. Like you'd think we would be much more bearish than we actually are on technicals, especially on trend. You'd think we'd be in the cloud now on the daily or below the cloud, maybe even closer to 50K, but we've really hung in there at 60. So I would consider that a great sign considering how many headwinds we have blowing in our face. This is spot ETF flows net weekly, and past 2 weeks have been negative. Last week was more negative than the week before. Friday was the first day since April 11th. That was actually a positive inflow day. And price around, these weeks when we're pushing 1-2 billion a week, certainly much different than what we've seen over the past 5 weeks. Now, the skeptics, the Biancos of the world, love to point at the past 5 weeks and say, well, there's been nothing coming in. It's only hot money and it's going to come out. Hey, that's possible, but we haven't seen that yet. You can be skeptical all you want, but it's pretty clear we've got 12 billion coming in already, which is far above expectations. And if price moves up or down here, we're going to see flows in and out one way or the other. So get ready for that. GBTC also saw the least amount of outflows since many weeks ago, probably 8 weeks ago or something like that at this point, which is a good sign overall. They also announced some low fee product with some fee swap component, and it's a mess, and nobody knows the dates. Nobody really knows the details. There's paperwork, there's a lot of stuff going on there. What exactly is going to happen? But I suspect if people get transferred or a portion of their GBTC gets transferred to the new product with a higher average price, aka less tax burden, again, I don't know how this actually works, but if that happens, I suspect even more is coming out of that thing. So regardless of the fee component, we also have runes popping off, which I'm not really a fan of in general. Fees are astronomical. We'll take a look at that. Something else that sort of got put on the back burner. 3 things to think about. GOX distributions, Gemini earn distributions, and FTX distributions. All of those are going to happen probably before the end of the year. Some of the GOX stuff has already started in fiat format, JPY, not BTC. I believe FTX is going to be in USD, and then the Gemini stuff is going to be in whatever you had on the exchange in kind. That's some more stuff to just think about. I don't think that's a headwind or a tailwind necessarily, but additional supply at key moments is going to matter, which is one reason why I'm kind of hemming and hawing about whether or not this rune stuff is actually bullish, because we're just handing more Bitcoin to the miners that are going to turn around and sell the Bitcoin. Many of them, not all of them. If we look at the halving component, plus or minus 400 days from halving, we're about where you'd expect us to be. You can slice and dice this a bunch of different ways, but I'm pretty happy with where we're at. Again, look at the 200-day lull that we see in price. Very little bullish price appreciation up until maybe like day 60, 75, day 100 on average, at least based on the past 2 halvings. We don't have 600 data points here, right? We can, of course, deviate plus or minus whatever, but we're in the realm of possibility here, certainly. Looking at seasonality since 2014, all this is doing is looking at each day and then averaging out what each day was like. So it's kind of like taking the quarterly, monthly, weekly, daily, and making a chart out of that since 2014, the past decade. And generally Q1 fairly muted, Q2 is strength, and Q4 is strength. So you can see my read on this would be we are well ahead of schedule based on seasonality. This is clearly a deviation so far. I would view this as a little bit of a headwind because we are more likely than not to go sideways or down based on seasonality. This time is different. Sure, we got the ETFs, but it's not screaming bullish. Now, if we add 2012 to this, it's a little bit different. If we add 2012, we are right smack dab in line with expectations. It's just 2012 is such a price outlier. I think it's hard to seriously include that into the mix here. If we want to look at the halvings in total, again, we get this band, this range, first, second, third. We're in the fourth. This is Ecoinometrics. He does great stuff. And the price bands here are significantly wide, right? You can see the average growth in there. Realistically, Q4 2025, do we hit 1 million in change? Probably not. I'm gonna say we're probably go with the under on that one. I think it's gonna be closer to that 300K level for sure. Talking about the fees real quick, it's a great proof of concept. It happened. My fear is that a lot of this rune stuff is just gonna sort of disappear eventually, a lot like the ordinal stuff kind of did, having this like waves of manic fee transactions. It gets headlines, it gets people excited, I guess. I feel like more people are burned than not doing this sort of thing. But there's obviously a massive fee spike, and we can see that on the daily. In BTC terms, the second highest day outside of 2018. In notional USD terms, the highest day ever, 105, 107 million in fees. So is this good for the mining stocks? Sure. This stuff was great for the mining stocks. What's good for the goose is not necessarily good for the gander, in that my opinion is, look, if we're giving miners more BTC to sell eventually, it's going to get sold. It is what it is. It's allowable on the network, but I would just keep that in mind. And that is a significant early boon post-halving to the miners. Hitting on the liquidity piece real quick, I talked about reverse repo and TGA. I'll talk more about that tomorrow, but something else I haven't looked at in a while is the high yield credit comparison. Other people looked at this, TXMC probably being the most obvious amongst them, but looking at these halving periods, looking at high yield credit, we generally tend to correlate with high yield corporate bond prices because that generally represents an increase in liquidity in the ecosystem. And again, this isn't like, oh, we can't go up because corporate bond prices aren't going up. That isn't the takeaway here. The takeaway here is, what is the probability? Is this a headwind or a tailwind? Is the correlation broken, or is it a bit early on the liquidity side to see further price appreciation in the near term without the go ahead from liquidity, right? That would be my read. So I do think it's going to be a little harder if liquidity isn't picking up quicker or eventually, or if liquidity continues to peel downwards. We can look at global M2, and this includes USA, China, EU. The whole list is right here, not just US, not just the Fed. And we've kind of inverted head and shoulders up here on M2, and it looks like M2 wants to go higher. Should it go higher, Bitcoin price is likely to easily go higher. It's just, we're not there yet. I think that it'll be obvious when we see a new high in global M2. I think the current high is somewhere around $93 trillion, maybe a little higher than that, 94. But we're not quite past all-time high levels just yet. Before we go any further here in the charts, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. I don't have any ETH or Solana charts in this video, so I'll quickly look at these on Kraken Pro. And there's really not much to say. We're not below the cloud, we're not above the cloud. As neutral gets based on the daily time frame. And really for me, until either of these are above or below the cloud, I just really don't care about them individually. Solana certainly looks like it's closer to being above the cloud. We'll probably be above the cloud quicker there. Bullish TK cross, price above cloud, and it's go time. A little bit of an Adam and Eve here on a lot of alts as well. It's just a little early just to call this a breakout, right? This may happen throughout the week. This may do well throughout the week, but ultimately what you want on the daily is a close above the cloud with a bullish TK cross. That may take minimum another week, right? But trend is still fairly okay on ETH and on Solana. Looking at Bitcoin, zooming way out, parallel corridor, crowd favorite. This is from BitBo. It's a log chart, if you're unfamiliar. That's why the x-axis may look foreign to you. But based on this model, we have kind of zigzagged our way around, ping-ponged between extremes, and we are about where you'd expect for this model. The fair value of the model, somewhere around 76K, something like that. And one read on this for somebody who, like me, is thinking, okay, what do I do here, right? Do you go into cash? Do you get paid to wait on yield if you're in the US or somewhere else where you have access to some sort of US Treasury or something like that? Or do you add this to your trading model and say, look, the risk reward here, downside is 30K, upside is 300. That's pretty skewed in the bullish direction, right? So party on. Now we can look at today versus January 2025 versus 2026. And again, this is highly favorable for extreme bullish continuation eventually, right? Now, if we get into 2025 and we start to approach craziness of anything north of 100,000, anything north of 200,000, 300,000, right? Not saying it'll happen, but this model has been pretty good at giving you some idea of what may happen here. But so far, so good on the power law corridor. We're still above the daily cloud. Miraculously, we held above both the Kijun and the daily cloud after flirting with a close below the Kijun and in the cloud. So as not bullish as this might feel, the trend still says everything's fine. That changes the moment we get a bearish TK cross, which happens as early as Friday, most likely, with a close, a daily close inside the cloud. Those two conditions, okay? Not on the 12-hour, not on the 8-hour, not one or the other. Both of those things on the daily, and then, and only then, the cloud is projecting a move to 55K. You can see what happens in January based on the probabilities. Again, this is not like this can happen or this won't happen. This is what would you like to see, right? If you're bearish, what you like to see is a bearish TK cross on the daily with a price in the cloud, okay? In January, we got price in the cloud without a bearish TK cross. That eventually went on to form an inverted head and shoulders, and the rest is history. So that is one part of the trade setup for the week. do we close in the cloud? Do we get the bearish TK cross? Okay. That's the short trade. The other part of the trend here is we're still above the 20-week moving average. That's this 140 moving average here. Support for that is basically the same as the bottom of the cloud, at least likely to be by the time we get there, if we get there. In a bull trend, we don't typically close below the 20-week ever. So if we do that, it would be unusual, and it would be the first time we'd see that in an extended bull trend. Okay. That's where the target is definitely 54 to 55, at least initially, if we break down, right? If, okay. If we break down. So that's the short side. The short side to me is pretty limited here in the near term. Now, if we close below 54, then it's a different story, right? But for now, that would be the target. On the downside, you can also add the lagging span on the cloud, something I never talk about, never use, but whenever you're kind of splitting hairs on what to do, you want the lagging span above price, above cloud. So right now, it is above cloud, it's not above price. This may take another 2 weeks to eventually get above price, assuming price goes flat. But as we stand here, nothing is screaming like, oh, this is a long, right? It's not like September 2023, where you get a bullish TK cross, bullish Kumo twist, and Chiku span above price, above cloud. It is none of that, right? It's a different market, okay? Clearly momentum is flat, sideways, based on a bunch of different measurements, but we are still fairly bullish. The lagging span is the first thing, usually, as a warning sign for momentum, because once it closes inside of price, that just says, you're ranging for an extended period of time here, which we already know, but still not bearish per se. We can also add a pitchfork to this, get 3 base points here. You get a rate of change. I like how this has fit price from these lows. I like that price has kind of lived in this midpoint. I like that we were bullish or bearish, kind of above or below. Once we get to the top of this, it's a little bit more, what's going on here, right? Because we're back in the cloud after being above the cloud, much like, the pitchfork back in after being above, much like the cloud though, and the 220-week moving average. All that is still pointing to the same spot. So to me, there's a confluence of support if we break down at 54 to 55. Now, it would make total sense to me based on the pitchfork if we attempt a move back to this midpoint and then go on our merry way higher. So we're definitely kind of in an awkward spot here, right? Do we close outside of the pitchfork and, do we draw another pitchfork up here, right? All this stuff is super subjective, but I still like 54 to 55 as support. We did have this chart pattern that, depending on how you measure it, it's certainly a bearish reversal, at least it was. Did it reach the target? Depending on if you use a more conservative target, I would argue, yes, it dipped into the 1618 territory, but I still think this is a valid pattern so far. We haven't really invalidated or negated anything that's going to happen with a close above 72. So this is also still potentially on the table. When you've got a range, it's kind of your job to determine, is this continuation? Is this a reversal? Is this accumulation? Is this reaccumulation? Is this distribution? Is this redistribution? Whatever it is. I've been seeing a lot of bull flag calls over the past couple of days. I don't really see that here. Is that possible? It's possible. It measures to 100K basically. I think the argument for a bull flag was much more pronounced previously in February and March. That pattern played out beautifully. Target played out beautifully. This may play out as a bull flag. I'm not saying it's not. It's just, to me, it doesn't quite look like it, but hey, why not, right? If we keep ping-ponging on these zones of support resistance, sure, let's go for it. 100K would be the target there. To start to lean more bullish, I'd like to see us above the 4-hour. Do we have evidence of an inverted head and shoulders here? Probably. Could this be an atom left, a V, and then maybe we make a U throughout the week? Maybe. Is this the left shoulder of an eventual bigger inverted head and shoulders? Maybe, right? There's just a lot of stuff that could happen here. Once we're above the 4-hour cloud, then things start to get more bullish, and you can see just how far below the 8-hour cloud we still are. So we've got time. We've got time to figure it out. I don't think there's a clean argument for bullishness here necessarily. I would much rather wait for a close above the 8-hour cloud than fool around with anything down here, unless there's some sort of obvious chart pattern that makes sense, which I would argue isn't quite there just yet. So the 2 trades for the week are, again, if we close into cloud, bearish TK cross, probably going to 54, what's most likely is chop. And then for the long, arguably, you'd either want to see a low time frame pattern play out, or you'd want to see a new high. At this point, the new high argument is basically the bull flag, right? Similar to the last one, we chopped around for a good long while, doing a bunch of nothing until we started breaking out. So if we magically close above 73, sure. Now breakout traders like myself have gotten punished for this range a couple times, but you got to shoot your shot. So I do like longs above 73. Back to this argument about volatility and uncertainty. If we look at the VIX, the volatility index, generally if the VIX is spiking or ranging higher, we have a harder time moving up. Currently, we are seeing the VIX curl up here. Just all the more reason to think like maybe now is not the best time for bullish continuation. Now, this was a price at 63.8 over the weekend, and we're clearly higher than that now, but it just makes the climb a little bit harder. We can also look at the MOVE index, which is the volatility index for the bond market. Similar idea. We tend to do best when the MOVE index is moving lower, not higher. This was SVB here. This was COVID. So I'd certainly feel more comfortable on the long side if VIX, if MOVE were all crushing lows rather than spiking higher like they are here. Briefly on alts, still not the time. Okay, this is basically total 2 alt BTC pair, very much below high time frame cloud. We are officially now after halving, and you can see how much after halving we moved up on this metric last time, almost a year later. So yeah, that was COVID-ish somewhere in here, right? March 2020. But it could be a good long while before alts do anything. Now, if alts magically close above the cloud here, then it's a different story. But this is just the opposite of Bitcoin dominance. It's the inverse of that. Where you see strength on that chart, you see weakness on this chart. And the conclusion, the takeaway is it's better to be denominated mostly in BTC until this flips bullish again. Talking about legacy real quick here at the end, the 4 horsemen of the risk apocalypse, okay? Dixie, USOIL, gold, 10-year yield, 2-year yield, pick whatever yield you want. Yields are definitely rising. The technicals on this certainly doesn't look bearish. You could argue there's a parabolic move here, that it might collapse down to 4.4 or something like that. But you could say the same thing for almost any of these charts, including gold. Is gold going to give any back to 2200? Maybe. The gold bugs will tell you, well, when gold starts running, it starts running. Okay. Oil has already curled down a little bit. That's more of an inflation horseman. Dollar strength, DXY. Above the weekly cloud, we don't like that. It is making multi-month highs. We don't like that. Last week kind of closed a spinning top, which just says buyers and sellers coming to an equilibrium, but this is undoubtedly pretty bullish here. It's in a massive range since 2023. That could be interpreted as some sort of complex inverted head and shoulders. It's certainly not frankly bearish, right? It's not outright bearish. Could this reverse here? Yes, right? Stay in the range. Would love to see it, but we have to be really careful if this pushes the 108, if this pushes the 110. I mean, that would get pretty ugly, and that's how I imagine Bitcoin spills lower to 54, and then anything above 108, then we risk sub 54 is my guess on DXY. If DXY closes near 114 or something like that, then I think it's going to be pretty easy for Bitcoin to close lower. So definitely keep an eye on that one for the next few weeks. And the legacy indices just look absolutely horrific. This is the legacy cloud settings on the SPY. And we're closing below the cloud with the bearish TK cross. Sorry, in the cloud with the bearish TK cross. So it is not a bullish picture whatsoever. You could have watched this thing on the Tenkin. You could have used Williams fractals. You could have used the yearly pivot. I've been screaming about this thing for a while, just saying like, look, this does not look bullish. Looking at seasonality, we are kind of bearish earlier than you'd expect on seasonality. So again, we're not correlated to the SPY on the Bitcoin side, but it may be harder for us to go up with legacy crumbling like this, VIX spiking, MOVE spiking with yields, right? It all talks to each other at the end of the day. And then QQQ, of course, also rolling over. Same thing, bearish, TK cross, price in the cloud, just cutting through the cloud like a hot knife through butter. The last bottoming process worth mentioning here, the S&P and the Qs, that took months to play out. That took a quarter and then some. Now, it's certainly possible this happens quickly, Looks like the SPY is just getting started. It's always salvageable. It's just, again, probabilities. What does this look like? You know, it looks bearish. It looks very, very bearish because it says the bottom of the cloud is the target. And that's quite a ways from here. The Qs also, right? Sub 400 we're talking on the Qs, which in the grand scheme of things, who cares? That's just retracing kind of the first quarter of the year. But in this immediate moment where we're kind of precarious on Bitcoin holding just above 60, that could be enough to spill the apple cart and bring us lower. We'll talk more about legacy stuff tomorrow, but we also have a ton of earnings this week, Tesla being maybe the most important for many people on what's going on there. We've got Meta, Alphabet, Exxon. So it should be a jam-packed, fun-filled week with PCE on Friday. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.